All right, there we go. Let's try that again. Good morning, everybody. Hopefully, everybody is doing well. Hopefully, you guys are having a good Thursday. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you guys, bringing you our next mobile coaching stream. What we're going to be covering is talking about how easy it actually is to follow what VectorVest is going over to make your decision process in market on any when to buy, when to sell transaction as simple as possible. So, or even just knowing, hey, is this a good stock to get into right now? We're going to be covering all of that and showing you how easy VectorVest makes that decision process. So that way you guys can, have more free time to be able to do things you'd rather be doing. So if you guys can hear me out there, type in VV Nation into the chat. Let's see that get going here this morning. Also, if you're new, welcome first and foremost. We're glad to have you. But if you will, smash that like button because that helps us out with the YouTube algorithms. Doesn't cost you a thing and shows support for the channel, shows support for our streams that we do. So if you guys enjoy these streams and want to see them continue, as always, make sure to smash that like button there. So that way, we can continue to do what we're doing here at VectorVest. So there we go. With that, seeing a lot of people jumping on board. Calvin's saying, I'm new. Welcome, Calvin. Calvin, glad to have you here. But also, good morning, Jay. Good morning, Drew, Terry, Salim, Cyborium, Steve. Good morning. Hopefully, you guys are all doing well. Glad to be here with you guys. So, let's see. Making sure that shows we're on over on YouTube. Let's make sure we are live on Facebook as well. Facebook is a little slow here this morning, but what else is new, right? Is the Facebook live streaming? It should be, Jay. Should have gone live. That's the thing. Facebook is getting a little annoying. I can't wait for the day that we get rid of that because at this point, it's Facebook just doesn't work nearly as good as what we're seeing with YouTube. All right, let me try one more time. Make sure we can get the Facebook side up. There we go. Live video. Nora's new. Welcome. Glad to have you here today. So as always, what we're going to be doing for anybody tuning in for the very first time, what we do is we start taking a look at what's going on here in the market, and then we'll dive into our topic of discussion. And then as always, we'll finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. So if you guys want to see your own stocks analyzed, make sure just to stick around towards the end. We'll make sure we get those analyzed for you guys. All right, so looks like Facebook is having some issues. No surprise there. Failing again to do its job. So with that, we'll just go ahead and skip that. If it comes up, somebody let me know in chat. But looks like Facebook is having some troubles here this morning. Just taking one more quick check. Yep, doesn't look like Facebook launched here this morning. So therefore, it says it's going on right now, but doesn't show that it's connected. Let's try this one more time. All right. Stop that. Turn that back on. Let me try this. All right. There we go. So now it's telling us we are live on Facebook. So welcome everybody that's tuning in from Facebook. Glad to have you here. With that, let's go ahead and jump right into it here this morning. I'm here on Facebook. Well, John, this is YouTube, but close enough. All right, so with that, let's go ahead, jump right into it here today. Take a look at what's going on in the markets, and then we'll dive into our topic here for our stream here today. All right, so as always, starting off at the very top center, we have the major indices. So right now we can see the Dow is down about 1.5%, Nasdaq's down well over 2%, down about 2.3%. S&P 500 down about 1.7%. Overall, the VectorVest composite down 1.4% so far. If you look at the little mini graphs, it does look like they're trying to recover a little bit here today, but still in deep red territory. So for now, that puts our needle 2 ticks into the red. Therefore, the color guard is somewhat bearish, and VectorVest doesn't advocate buying any stocks at this time. If we scroll down here, as always, if you ever want an update on what's going on in the market on a daily basis, make sure to watch that daily color guard report where we cover, what's going on in the market today, what news you need to be aware of for tomorrow, and how to prepare yourself for the next trading day. Basically, in essence, it'll make sure that you never get caught off guard with what's going on in the market and keep you up to date and keep you on the right side of things. So then as we scroll down, getting into the color guard. Now the color guard analyzes 3 parts of our market timing system here at VectorVest. The first part we look at is the price, which is looking at the prices of VectorVest Composite. Now, the VectorVest Composite is an arithmetic indexed average of about 9,200 stocks in the US market, and this gives us a better representation on what's actually going on in the market, because it's not just looking at the Dow's 30, the Nasdaq's 100, or the S&P's 500, but it's looking at 9,200 stocks. So gives you a real good sense of what's actually going on in the markets. The second indicator is RT, or relative timing. Now this is looking at the short-term price trend of the overall market, and it's going to be cast on a scale of 0 to 2. So if it's above 1, the short-term trend of the market would be up. Below 1, the short-term trend of the market would be down. So at 0.73, that tells us the short-term trend of the market is down. Also that it's moving lower, or it's picking up its pace to the downside day over day and week over week here. And then last but not least, we take a look at the buy to sell ratio, or the BSR, which is simply looking at the overall health of the market by analyzing the buy ratings and comparing it to the sell ratings. And as we can see, since it's below that level of 1, that indicates overall market weakness currently. If we dip any lower than where we're currently at right now, we'll see 3 red lights appear here in the color guard, giving us an even more bearish signal for the day so far. So after that, we then take a look at the MTI, of the market timing indicator. So this is going to be cast on a scale of 0 to 2, and it's looking at the underlying trend of the market. So below 1 tells us the underlying trend of the market is currently down. Now, one of the things we've been talking about here with the MTI is historically, the MTI has gotten to a level, I believe it was 0.3 if I'm not mistaken, and all the major sell-offs that we've seen in the market, it tends to reach that level of 0.3 at the most extremes. So that's the level we're going to be keeping an eye on here for the short term to see if we get to those points, because that, historically indicates a really oversold market, or a good inclination of when we can start expecting the real bottom of this market starting to hit us here. So then after that, the next column is the trend column, where we show 2 parts of the trend each and every day. So the first part is looking at what we like to call the primary wave, which is just simply the weekly trend of the market. And as we can see, it is down since we're lower on a week over week basis. Second part is looking at the underlying trend of the market, or the MTI. And since the MTI is below 1, the underlying trend of the market will remain down as well. And then last but not least, we take a look at the calls column, which stands for our confirmed calls. And our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. And as you can see, we still remain in that confirmed down situation as of today. Now, as always, if you're ever going to be looking for a day to be buying, or a day to be playing the market to the downside or shorting, we always want to take a look at the advanced declines. And when we look at it, what we're looking for is at minimum a 2-to-1 bias. So since we know the markets are moving lower, if you're wanting to open up a contra ETF, or a put, or some way of playing the market to the downside, well, today would be possibly a good day to be doing that, since there's definitely well over that 2-to-1 bias declines to advances, since the advances are sitting at about 18%, decliners are sitting at about 71%, and then stocks that haven't really moved at all sitting at about 12% so far. So well over that 2-to-1 bias, therefore actually closer to that 3-to-1 bias. So today could be a good day to be playing the market to the downside. All right. So now that we've covered what's going on in the market here, as always, let's jump into our topic here. So what we're going to be focusing on here today is seeing how easy and how simple VectorVest, or the stock advisory app, can make our decision-making process. So, the last few months have definitely been a rocky ride to the downside here, where we've seen these, short-term rallies that get people excited. You see a lot of major talking heads on TV saying, oh, this time's going to be the official bottom. I'm calling it now. The bottom is here. And everybody starts buying in, or, retail starts buying in, only to get smacked, turned around, and then watching the market drop straight back down. So luckily, though, with VectorVest, that can help us avoid those kind of situations by keeping us on a more systematic approach rather than that emotional approach. Because what we've talked about here over the last 30 plus years at VectorVest is, emotional investing is the easiest way to lose your money in the markets. If you follow your emotions are going to get, the best of you. And that's when you're either going to be sticking into a trade way too long and taking a bigger loss than you should have, or you're going to be jumping into a trade a little bit before you should have, and then therefore get caught off guard when it starts reversing. And even if you did think you had a plan in place, well, when you jump in before your plan tells you should be, and then all of a sudden it goes against you, then your rules that you've developed are pretty much out the window, and then you're going back to that emotional trading once again. So this is why we're going to be focusing on that here today. And the very first part that we're going to be talking about is extremely simple. So the very first part is, let's say you had a day that you wanted to buy. Let's say, yesterday or Monday even, the markets were moving higher. Everything looked pretty good. You had some people on TV saying, oh, the bottom is in, what Powell is saying. We are happy about that. So let's say we wanted to jump on board and go jump into the markets. Well, always check VectorVest before you make that decision. If you come into the app, right at the very top, we cover it every single week. You get the market timing gauge. Now, it tells you explicitly here whether you should be buying or whether you should not be buying. It's never going to be an indicator on when to sell, but that's why we use stop losses and market management or money management criteria to help mitigate or help manage our individual positions. But if you're coming in, you're seeing, oh, markets were up, but all of a sudden we had 3 yellow lights across the board. VectorVest was advocating caution. We really weren't saying, okay, it's now time to buy. Well, at that point, okay, I don't need to be buying, even though, things were looking good. The market was looking good. Man, I really wanted to jump on board. Well, if you did, look where we're at right now. Major indices are now, or the Dow's down 1.25%, Nasdaq's down about 2%, S&P's down about 1.4%. So while, it looked like a good time, the talking heads on TV were saying it's a good time, following the data wasn't advocating to buy stocks at that time. So therefore, you come in, check that, tells you not to buy or tells you to use caution. Well, you're done for the day. You simply close out of the app, go about your day, avoided getting into a stock right before, we see the market pulling back. This is why VectorVest has been around for well over 30 years now, is because our market timing system has been proven time and time again to be, the right, or to keep, or has been proven to keep you on the right side of things by consistently following the same systematic approach. No matter what the market conditions are, it's always been there to keep you on the right side there. Yeah, Louis, that's a good way of putting it. In other words, don't panic and get married to any stock. When losing, you can buy back that stock within 30 days and keep the tax loss for a lower price. Exactly. Basically, make sure to follow or make sure to check what you're looking at here, because it'll help you avoid making the wrong decisions based off emotions. Once again, systematic approach to investing has greatly outperformed an emotional route to investing time and time again. What about short ETFs? Well, right now, if we're like we just said at the very beginning there, Dave, we have 2 ticks into the red. The market is somewhat bearish. We don't advocate buying any stocks. Well, contra ETFs are not stocks. And therefore, if you're looking to play the market to the downside, we scroll down, take a look at the advanced declines. We're well over that 2-to-1 bias we prefer to see, indicating that if we do get into a bearish trade right now, the probabilities are on our side that we're going to be starting off with that cushion that we like to have, rather than starting off with a loss right out of the gate. So, yeah, this is going to be, a good time if you're looking to add a contra to your portfolio. If you needed to have that, extra space available that you wanted to, add a hedge or just simply take advantage of the down market, right now could definitely be a good time to potentially do that. Jay puts it best: cash, contras, and protective puts, CCPs. we're gonna make that our slogan here, Jay. CCPs. I like that. Cash contras and protective puts. All right. So yeah, when seeing that, that could definitely be a good indication to say, okay, even though things are looking good right now, I probably want to just, keep my powder dry, wait for a better opportunity, wait for, confirmation of a proven timing signal to tell us, okay, now I can start getting in. And even when you do that, when you use the color guard the way it's supposed to be used, it's not a, one shot type of deal. Meaning, when you see it tell us it's okay to buy stocks, or when we do see those green lights starting to actually appear here, it's not saying, okay, go load your portfolio up with stocks right now, go buy everything that you possibly can, max out your margin, all of that. No, it's simply a way of being able to step into the market slowly. So for that first green light, especially with the current conditions, if you're, really thinking that the market has hit a bottom, things are looking bad overall. So yeah, maybe I need to get back in. Maybe I need to start, closing out a contra or two and adding a long position. Well, that would be where you use the color guard. That first green light that you see, maybe add one stock at a time until your portfolio's transitioned. That way, if you're worried about the current conditions of the market, by, reducing a bearish position, adding a long position, you're slowly hedging yourself the other way. And then, as the market progresses, or let's say it starts really turning around that time, then your portfolio will slowly transition from all bearish to all bullish. And then you'll be able to take advantage of those that bull market or that bull run that we'll see in the markets. So that's how you really want to use the color guard. Not as a, I'm going all in long or I'm going all in bearish. It's simply, a way of using, or a way of being able to slowly transition yourself from being one way in the market to another way, and having that nice hedge in between. That way you keep yourself protected no matter what the conditions are doing. Let's see. Yeah, we're definitely going to have to get those, Jay. We're definitely going to have to get those. All right. So with that being said, the next step, is, let's say we're back into an up market. So let's take this another direction. If we're in a down market right now, like we're seeing, what we do is we come in, we see it's telling us not to buy, we're done for the day. 30 seconds at most, and you've made that decision of, okay, now is not the best time. I'm not going to let my emotions get the best of me. I'm going to avoid making this decision right now, wait for a better time. So, saved you money, saved you time, moving on with your day. But let's say we're on the other side of things. The markets are steadily rocking and rolling. The Fed decided to start pumping money back into the market. They're going to cut interest rates, all of that. The market really starts to soar. Well, and then you first off, pull up the app, take a look at it, tells you, okay, now's a good time to be buying stocks. Well, then you go into either your watch list you have built, or one of the many watch lists that we have for you to help you out with finding stocks that are making money at any given time. And then you start to analyze it from there. So just to make sure, there's no bias put into this, you guys you guys understand that, there's no cherry picking involved. I want to see a stock from you guys real quick. Somebody put out a stock and we'll take that and use that as our example here. So make sure it's a decent stock as well. We're assuming it's an up market. So let's use something that, is looking okay here today. Let's see. Don't understand. Has good news, but So Joe, if you have a question on what stock or want to analyze the stock, stick around towards the end. We'll analyze any stock you want to take a look at here. All right. So end phase. All right. So we go in, we had it, let's say in our watch list or somewhere. I'm just going to pull up the analysis. You pull up the stock analysis report and you see, okay, let's go ahead and analyze this stock now together. Stock has a buy rating. Check one. That's a good thing. That's what you want to see in an up market. So then you go through the analysis down here at the bottom. Now, as we talk about, these four indicators are all cast on scales of 0 to 2, and above 1 is good, below 1 is bad. And depending on your own investment style could depend on, your personal, or what exactly it is, what the criteria it is that you're looking for. We're going to take the route of, let's say, a prudent investor. So therefore, as a prudent investor, whenever I look at this analysis, when we look at the first two indicators, the RV and the RS, we want to see them both above that level of 1. Well, the long-term potential, or the RV, is below 1. The RS is at 1.02. So as a prudent investor, I'd probably pass on this stock for the time being and find another stock out there that meets the criteria that I'm looking for. But if we were more of an aggressive investor, or actually more of a conservative investor at this point, we come in, we see the RV is below 1. All right, not too much to worry about. As a conservative investor, my main focus is RS. Is RS above 1? Yes. Okay, moving on to the next step. Looking at RT, the relative timing. That tells us the short-term price trend of the stock. So if it's above 1, that tells us the short-term trend is up, or that the stock's making money. If it's below 1, that tells us the stock is moving lower or not making money. So right now, as always, in an up market, you do want to see that the stock is rising, moving along with the market. So at 1.26, yeah, this stock's definitely in a nice steady uptrend. So overall, the stock is favorable and it's moving higher here today. We come take a look. Well, the stock's a little overvalued, so I want to be careful with that. But, if you're somebody who's, willing to take on, an overvalued stock, then okay, maybe you'll take it, maybe you won't. But, these are all the questions, or these are all the parts that, as an individual investor, you need to have, clear written down rules for yourself to follow. So, set your criteria, write down your criteria that you use to identify a stock that looks good for you. So let's say for me personally, I'm okay with taking an overvalued stock. So therefore, okay, I like it. This stock is more conservative and a nice steady uptrend. It is overvalued, but you do have a strong push higher here. Therefore, okay, I'll take it. Well, before we say that final decision though, as always, before you ever buy a stock, always take a look at the graph of the stock. Because a graph is like a big picture of the stock, and as the old saying goes, a picture's worth 1,000 words. So we go take a look at the graph. Right now, I have it on a 6-month basis. I'll zoom in. Well, we have a nice steady pattern of higher highs and higher lows currently. But on a 6-month basis, we're just moving sideways. Typically, we want to see a nice steady rise in price from bottom left to upper right. So therefore, this really doesn't meet that criteria quite yet. That in itself would probably tell us to hold off. But let's say it was steadily moving higher. Well, go ahead, come to the graph section, change it to the earnings per share. Go back. Looking at earnings. Earnings are steadily rising like a stair step from bottom left to upper right. That's exactly what you want to see. So that's a good sign. So this one may be staying on my radar for a little longer until we see that price action really confirm, that nice bottom left to upper right pattern that we're looking for. But overall, everything else look good. Just waiting to see price action look a little bit better. Granted, current market conditions probably are hurting us right now, but you guys should hopefully be able to get the idea of what we're looking for here. All right, so that one didn't meet our match. Let's see DVN. Next stock in that list. DVN, good long-term potential, but does have a little bit more risk than the average stock out there. But even starting off at the very top, though, it has a sell rating. Therefore, going to be passing on this one if we're looking for a long stock to be taking in a nice, steady, uptrending market. So don't even have to go any further. We see that sell rating right at the very top tells us stay away from it for right now. Therefore, we're done. This is how fast VectorVest can make it. You just pull up the stock, take a look. The first thing you see is the sell rating. Don't need to go any further. Now, if it does, have a buy rating like we saw with Enphase, then we go a little bit further and we spend, maybe 2 to 3 minutes doing the analysis, taking a look at the chart real quick. All of that can play all of that goes into that in decision process, and all of that can be done extremely quickly with the Stock Advisory app, especially if you're somebody who's on the go. I see a lot of people putting in DQ. Okay, let's say DQ is our next stock we were looking for. This one has a buy rating. It's up nicely here today. Looking at the analysis, good long-term potential, less risk associated with it, and a nice steady uptrend. So overall, the stock's favorable. Everything looks good from a prudent standpoint. Scrolling down a little bit, it's even undervalued, so that's definitely a positive. So yeah, this meets all the criteria that I've established for myself for a good looking stock. Next up, take a look at the graph real fast. Looking at the graph, price is steadily rising from bottom left to upper right. Let's go ahead and put it on to 1 year. Earnings steadily rising. They have pulled back a little bit, but starting to pick back up again. So therefore, you have, well, on a 6-month basis, price steadily rising. Earnings per share, about flat, starting to pick up over the last quarter though. Can the built-in searches help find quality stocks to buy? Yeah, Salim, but as always, if you noticed, when we first started off talking about, how to make an investment decision or how fast you can make an investment decision, notice we didn't skip over the homepage and jump right into, the different searches, just trying to find whatever has a buy rating right now. Market timing trumps any individual rating on a stock. So therefore, that's why when we first came in, we first started here today, we started right here on the homepage. If the timing is telling us do not buy, you don't need to move any further into it. That's why we didn't start off taking a look at, stock pick ideas and actually, let's see, overall top rated stocks. There's some in here that have buy ratings that are doing nicely, but even though some of these are going against the overall trend of the market, we still wouldn't advocate buying these at this time because the overall timing on the market is not in a favorable condition right now. So I hope that, that point gets remembered going forward, because that will help a lot of individual investors avoid making some really bad decisions. I've seen that, that's probably one of the most common things with working with people that use the mobile app. You're not used to using something that is a full-on system. You're used to just, having to manually input it and see what it tells you, and that's about it. Well, here at VectorVest, it's a little bit different. And what people tend to do is they come in, they go into these stock pick ideas, skip over the whole entire homepage, and just look for whatever has a buy rating, and then they go ahead and buy it, regardless of what else is going on in the market. Then they, come back a month later, 6 months later, however long it is, and then complain that the stock they bought that had a buy rating that we were saying to buy lost them money. Well, yeah, of course it is, because you skipped over the most important aspect, and that is the timing right there on the homepage. This is understanding how to analyze a stock and understanding, what stocks to buy when the timing is right is definitely a huge part of that decision process, but it's not the most important part of the decision process. Making sure you're buying when the tides are rising is definitely the most important aspect there. So hopefully that answers your question. Hopefully that, even that little bit helps you avoid some headaches in the future there. All right. So yeah. With that, let's just go ahead, quickly recap. 1, check the market timing. Make sure, no matter what the markets are doing, make sure to check the market timing and make sure that, it's telling us that right now is the time to be buying. When it's time to be buying, don't just go, all in one way or the other. Use the gauge to help you slowly transition your portfolio from either bullish to bearish or bearish to bullish. Therefore, let's say, we're in a bear market right now. Market starts transitioning. Whenever we have those green up days, maybe we take profits off of one of our best performing contras and then add a stock for an upside play, and have that slow transition so our portfolio stays hedged even in the times where you're most fearful. But then as things improve, your portfolio improves with the market as well and stays on the right side of things. So that's first and foremost. Second, if you do have a day that you want to be buying, make sure to analyze the stock. Make sure to set yourself some rules. We'll go back to DQ. From a prudent standpoint, you need to see stocks with an RV and an RS both greater than 1. Obviously, RT has to be greater than 1. You want to make sure the stock is moving higher upon purchase. Basically, making sure that it's doing what you want it to do when you get into it. That way, because the other side of that is trying to catch a falling knife. If you're looking for a stock that, you're expecting to go up, but over the last 6 months, a year, it's been steadily dropping, and now expecting it to just turn around miraculously without insider trading, that's you're not going to see that happen very often. So we want to favor stocks that are moving higher over time in a nice steady pattern from bottom left to upper right. So yeah, write yourself rules, follow your criteria, and make sure you stick to that criteria. Stay with a systematic approach. Don't let your emotions get the best of you, especially in these current market conditions. A lot of people have been very emotional in their trading over the last 6 months because, a bull market like we've seen for the last decade or so makes everybody feel like the best trader out there. But bear markets do happen. Sell-offs in the markets do happen. We do have extended down periods in the markets from time to time. So make sure you have a systematic approach instead of sticking with that emotional approach. And then that really summarizes it. So, in a matter of 3 to 4 minutes max, under 5 minutes, you can make any investment decision on any stock out there, whether it's a new stock that you've never heard of or whether it's a stock you've been following for a long time. If it's a stock that, let's say your buddy tells you about, or your friend says, oh man, this stock is really doing well. They're flying under the radar. Nobody's really looking at it, but it has a lot of potential. Well, put it in VectorVest and make sure that what they're saying checks out. Let's take one just randomly. DKL. Let's say your buddy was telling you about this. Well, you pull it up in VectorVest real quick and you can quickly know this stock has good long-term potential, but it is riskier than the average stock out there. So I am exposing myself to more risk with this one. Right now, yeah, it was on a nice steady uptrend for a little bit, but it's still an overall short-term downtrend. Overall, the stock's about average or slightly better than average. Buddy told me about Extro. I'm sorry for you, Jay. That is not a good friend. I can say that just because I hold some, but yeah. It's definitely not the time to be an Extro. I say that for sure. Hopefully maybe their announcement today or their shareholder meeting changes that, but yeah, Extro's been I don't know. They just don't have the news backing it up, and yeah, it's just there's a lot of hope, but nothing to back up that hope that I've been able to see so far. A few partnerships and potential for deals later on are great, but you need to see them start making money. And you need to also see that, they're not diluting their stock over and over and over again just to stay afloat. So we'll see. Hopefully, there's supposed to be some big announcements, NDAs that get announced by the end of this quarter, I guess July, at the end of July. So hopefully we can go off that. But once again, hopes and dreams don't make a trading plan successful. So there is that. All right. So with that, let's go ahead. Start to analyze any stock that you guys want to take a look at. And if you guys have questions on what we've covered here today, let me know in the comments as well. So let's see what stocks, you blame it on Glenn. Yeah. Let's see what stocks you guys want to take a look at here today. So start spamming those symbols and let me go back, see if we can get back a little bit. All right. Starting off, taking a look at a few other ones for the time being. Oh yeah, WTER. So Joe, are you still here? Let's see if Joe's still here. Calling Joe. Joe, are you still here? All right, we'll see if Joe's still here. If he is, we can go take a look at that stock he wanted to take a look at. But going into it, apps. APPS. There we go. So apps, good long-term potential, but does have a lot of risk associated with it. It's in a steady free fall for right now. Overall, the stock's about average. We need to see that timing pick up, to really tell us that, maybe we could take a little piece of it. This has been one that's been on an extended sell-off. Until we see the turnaround, staying out of it. Microsoft Msft. So Microsoft has good long-term potential, less risk associated with it. However, timing is of the essence, and right now is not its time. Overall, stock's about average currently. Costco, little less than average long-term potential. You do have solid fundamentals, so less risk associated with it. However, you are in a steady decline as well. Overall, stock's about average. It's a safe stock, but right now is not the time to be holding it because right now it's losing us money here. We already looked at DQ. Let's see what else we got. PSNY. Poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, stock is not favorable here. Raytheon, RAY, RTX, there we go. Oh man, seeing a lot of people tuning in on Facebook all of a sudden now too. Glad to have you guys here today. All right, RTX, good long-term potential, but does have a little bit more risk or inconsistent balance sheet than the average stock out there, so more risk. It is in a slight decline currently. Overall, stock's about average here. Lucid, LCID. Lucid, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, stock is not favorable here. NVIDIA, NVIDIA, good long-term potential, solid fundamentals or less risk associated with it. However, right now is not the time to be long into it. Overall, it's a good stock, just not the right time to be buying it. One of the things I will say, with all the semiconductors, the chips out there, the graphics cards, the GPU issues that they've been having, the GTX 3090 or the RT something 3090 has been one of the top performance GPU chips out there, or GPUs out there, and that's getting ready to change. So if you're somebody who's into computers looking to boost your performance or boost your computer, and you've really been looking at the 3090, waiting for your supply to kind of catch back up, hold off from buying it because you probably will see a lot of deals on them lately or over the next few months because there's a brand new graphics card or GPU coming out very, very soon that will be twice as good as what the current 3090s do. So for any techies out there, just a little tip if you weren't aware of that part. All right. CEIX, good long-term potential, but does have a little bit more risk associated with it. You are in a steady short-term uptrend. Overall, stock is favorable. I would keep an eye on that timing though. OLLI. All right, OLLI. Let's see. Ollie's. Poor long-term potential, a lot of risk associated with it. However, you have been in a short-term uptrend, but overall, just enough of a momentum push to make the stock a little bit better than average. Also, the crypto miners are selling their mining rigs and GPUs. Yeah, but nobody should be buying those. Those things, when they get done after from a crypto miner, those are going to be absolutely fried. I wouldn't buy a GPU from a crypto miner unless it was, for 90% off, because you're not going to get very much performance out of those, and they're not going to last for very long after they've been overheated and overclocked for who knows how long, for 3-6 months that they run them on average. Yeah. I hear loud and clear, check the RT. Exactly. RT is, after you buy a stock, RT becomes the most important indicator that you need to be aware of. Because that tells you whether or not the stock is making us money or not making us money. And if it's not making us money, it doesn't make sense to hold on to it. I think we can all agree upon that one. All right, let's see what else we got. XOM, good long-term potential, and less risk associated with it. However, right now it has been in a short-term sell-off. One of the things with that, I don't think this short-term sell-off is going to last very long, just with what's going on, around the world. Oil just has a lot of pressure to it to see the sell-off we've noticed. And I think, a lot of the guys here all can agree that, this correction we've seen with oil from this most recent peak seems to be, overdrawn here. So keep an eye on oil. Oil stocks still have a lot of potential here. But right now, not the right time to be long in it. Overall, it's a good stock. Wait for that time to pick back up, though. Let's see. TSLA. TSLA, good long-term potential, less risk associated with it. However, once again, timing. Timing is of the essence. Timing is telling us it is in a sharp decline. So while it is a good stock, while it has good fundamentals, right now is not the time to be holding it in your portfolio. LIT. LIT. ETF for lithium. So with an ETF, VectorVest makes analyzing any ETF extremely easy. RV and RS are fundamental indicators, and ETFs don't really have fundamentals because they're baskets, or they're looking at individual, or they're looking at commodities or something other than individual stock. So therefore, RV and RS are always going to be pegged at one. Whenever you're looking at an ETF, all you really have to do is focus on RT. At 1.13, it tells us it is in a slight uptrend on a short-term basis. Therefore, it's still favorable right now. LMT, let's see. Poor long-term potential, but solid fundamentals. So this is more of a conservative play. Timing, however, below that level of 1, telling us it is in a slight decline on a short-term basis. Therefore, the stock's about average right now. SOXS. SOXS, another ETF, triple leverage on the semiconductors. This is a contra ETF. 1.87 tells us it's in a really strong short-term uptrend. Therefore, it's still favorable. However, with the supply chain starting to slow down for semis, I would be careful with semis. I think there's still a little bit more downside risk, or a little bit more downside potential, but I don't see too much more downside potential from following the tech industry so much. I don't see too much more downside move before we start to see a recovery in that. So just keep that in mind. Let's see. PSX, good long-term potential, but does have a lot of risk associated with it. It's in a steady decline. Overall stock is about average at best. AMZN, Amazon, poor long-term potential, but solid fundamentals. The company makes money quarter over quarter, year over year. Timing though, 0.49, looks like Amazon did not get that split effect, favorability after that split. Stock is still declining. RT at 0.49 tells us it's in a really strong short-term decline. Overall, the stock is not favorable here. And I'm going to be interested to see how, if the same thing happens with Google, Tesla, when they do their splits, the split effect that everybody's been talking about just doesn't seem to be holding up in a bear market. It was great in a bull market, but in a bear market, doesn't really seem to be having that same benefit to the companies like we've seen in the past. All right, OLE. OLED, possibly, Reginald. I'm thinking this is the one you're looking at. OLED, good long-term potential, less risk associated with it. However, timing is of the essence, and timing is telling us stay away from it. Overall, stock is not favorable. HIBS. Therefore, ETF, high beta stocks, 1.73 on the RT, tells us this is still in a really strong short-term uptrend. Therefore, the ETF is favorable. SAMF or SAFM. Sanderson Farms, good long-term potential, less risk associated with it. It's been in a nice steady uptrend, so overall stock is still favorable. PLTR, Palantir, poor long-term potential, a lot of risk associated with it. You're in a steady decline, so overall the stock is not favorable. I saw there's some news, some government contracts coming out with Palantir. Doesn't even look like that was able to give a boost to it. Still down here today. Don't tell Glenn. Don't go Don't go into the trending Thursdays blasting Glenn for his Palantir picks. Let him be. Let him be. He's got to lick his wounds on his own. But yeah, just be careful with that one. All right. So any others that I missed? Let's see. We'll do 3 more here. PFE. Pfizer, good long-term potential, less risk associated with it. You're in a slight uptrend. Overall, stock's still favorable for the time being. AMD. All right, AMD, good long-term potential, less risk associated with it. However, right now is not the time to be long. It is in a steady decline. Overall, it's a good stock, just waiting for that time to pick back up. Blow up tomorrow this weekend. 5 Mondays, write it down. $5 by Monday. There you go. So we've got a Palantir bear with Leonard, and then we've got Glenn as our Palantir bull. So yeah, there you go. All right, and last but not least, we'll do one more here. FANG, FANG. FANG, good long-term potential, less risk associated with it. However, with all energy stocks or all oil stocks or oil-related stocks, it is in a steady decline currently, so therefore right now is not the time to be long in it. It's a good stock with good fundamentals, just waiting for that short-term trend to start turning back up here. So with that, let's go ahead and jump into the homepage, take a look at what's going on. The Dow is climbing back nicely here all of a sudden, now down only 0.9%. Nasdaq's cut its loss so far in half, now only down 1.1%. S&P 500 down 0.9%, below that 1% mark. VectorVest Composite down only 0.75%. However, we are still red. We still have 2 ticks into the red here. Therefore, the color guard will remain somewhat bearish, and VectorVest does not advocate buying any stocks at this time. Scrolling down, taking a look at the color guard. Still 2 red lights coming in the price and the RT. Buy to sell ratio has actually improved a little bit. RT is also improved just slightly here. Looking at the MTI is also slightly improving. So this little bit of recovery we're noticing here since our session started has boosted our indicators just a little bit. Not enough to really get us a comfort feeling, but nice to see a little boost nonetheless. Looking at the advanced declines though, we are still at that 2-to-1 bias. There's only about 25% of stocks moving higher and about 65% of stocks moving lower. So clearly meeting that 2-to-1 ratio that we prefer. Therefore, even with this slight recovery, the bears still have the lead so far for the day. So on that, it's been my pleasure being with you guys. I hope you all have enjoyed yourselves. If you have, smash that like button right now. I still see, about half of you guys out there haven't even hit that like button. So if you're out there right now and want to see these sessions more, make sure to smash that like button, subscribe if you're not already subscribed. And if you're over on our Facebook page, make sure to smash that like button as well and hit that share button as well to continue to grow the awesome community here. And with that, we do have Glenn coming up for Trending Thursday at 2 p.m. Eastern. So if you want to see, want to come hang out, see what news is making the moves in the market or what stocks are moving based off the news, come hang out with Glenn at 2 p.m. Eastern as he covers Trending Thursday for you guys as well. So thank you all for tuning in. Have a great rest of your trading day. Have a great weekend. Happy 4th of July. Happy early 4th of July to everybody out there. And make sure to be here next Thursday as we kick off our next stream. So until then, take care, adios, and toodles.